Gareth, probably a time to talk about money flows and markets, where money is going and what people are doing. What are you seeing?
Well, I think it's key. A lot of investors, we're focused on the three things: fundamentals, valuation, and technicals. Fundamentals is where we're looking at all the qualitative things, the geopolitics, how the Feds are acting, all of these things. And these are a lot of uncertainty. I think that word's been thrown out a lot this morning. But I think it's also interesting to look at the other two, the technicals and the valuation. On the technicals, we're seeing still financial conditions is still pretty easy for a lot of companies when we look at the actual metrics. So companies are still doing well. Valuations are still pretty high. Now, where are we going to see the shift there? And I think what's most interesting that a lot of us are looking at is traders can only sit on their hand for so long. Investors can only sit on their hand for so long. And what tends to happen when they sit on their hand for a long time, if you look at the actual price action, you start seeing things like the US 10-year, where over the week or the month, those prices get smaller and smaller. Same has happened with the dollar. Same has happened with some of the safe havens, gold, the trading kind of range.
Ranges are getting tighter?
Range are getting tighter. Yeah. And when that happens, we tend to have any small event see a material spike. An overreaction. And when the market overreacts, then that event also tends to go. And now we're in an environment where it's most likely the next event's not going to be small. Will it be a tariff upset? Will it be potential geopolitics? And a lot of these trading ranges have got very, very tight. So we expect an environment where it's going to become quite uncomfortable.
All right. So, the analogy I'm thinking of here after everything you've said is, a bubble and what the pin is going to be. Because when you've got uncertainty in the macro and in the fundamentals, right, but valuations are still high, that looks pretty fragile.
Absolutely, and this is where I think investors need to position. Yes, momentum is being an interesting trade, and we still like momentum, but you've got to have a way of protecting the downside, protecting the drawdown. We've got to have asset classes that are going to potentially be less correlated. And at the moment, a lot of things all move in the same sort of direction, and people aren't getting their defense, but they're not that worried, right?
When people talk about geopolitics and conflict and war, et cetera, traditionally, right, people have looked to commodities, one, and two, to hedge funds. This time, same thing?
Well, commodities is a little bit more messy because you have all the trade going on. So geopolitics and then the trade politics, commodities is a little bit more fragmented, and we see that as an opportunity for trading. But for longer term, hedge funds is becoming particularly interesting. Yes, hedge funds cost more than normal, but this is the environment where you want to pay the experts to be able to do the management. It's like, in a normal time, you can look after your teeth hygiene, no problem. But when you've got to pull out a tooth, this is when you need the specialist.
Dentist, yeah.
Today, I'm going to pay the dentist to get that tooth out as least painful as possible. And we're seeing that with the hedge funds. They're performing extremely well in this environment. And,
what kind of strategies, then?
Particularly, the strongest ones we're seeing is relative value. They've been able to attract that. We're seeing global macro is really doing well. So this is when they're taking this opportunity of volatility and playing it out. And we're also seeing next credit hedge funds as another area. So hedge funds is not just one basket, and definitely hedge funds is not the idea that they're looking for 40% returns. They're looking to hedge the portfolio. So this is when we're looking for 8, 9, 10% when the market is down. This is when we're looking for that resilience. And it's not always the case, but this is an environment where it's very attractive. And this is where we're really nudging our investors to consider maybe a huge concentration to US equity to start diversifying out, the rotation trade.